And ideally we want to see this volume imbalance to remain open, close back above this area right here, 4431 where our entry came in, and also ideally close above this bearish fair value gap. But for me to really remain in this trade, I want to see this volume imbalance to, leave it open. I know we're coming up to CPI, we just want to see how this would go, tapering it. $40 seconds to go. Like I said, if we close that in and close also below this high, just gonna take off one contract, I'd say. Got a little bit too late to the party. If I would have seen this close above, this inefficiency and this volume imbalance would have started to add to the trade here already, and then we would have already netted from this entry right here 2.5 points. Nice scalp. So we rejected. Let's see, 2, 1. So 1 definitely right here, because we closed in that volume imbalance. That's not what we want to see. But we open with a new bullish volume imbalance, still respecting this old high with the candle body. So I'm gonna leave one contract running 5 minutes before news. Let's see what happens. Our stop loss is still below this low. Our main take profit target, let's say if we're gonna continue higher, should take this high. But of course we understand we took the Asia sell side coming from the high of the day and we retraced. If we look at this as a ICT fib retracement, measuring from no, sorry guys, from the low to the high, we just hit the 61.8 fib retracement. We have the optimum trade entry aligning perfectly with this 5-minute bearish fair value gap. We have inversion fair value gaps here, plenty of them, volume imbalances during this, market maker trapping volume long period up here, once we took the previous day's high. But let's see. So also really from that midnight level would have been 5 points. Bearish volume imbalance though, that's not what I would like to see. And then we get the bullish momentum candle with a wick to the downside, respecting all our inefficiencies further down. No wick to the upside, closing above all that old stuff that we had on our chart, using it as support, continuing higher. This would have been a scalp, take profit at the high and the consequent encouragement of the fair value gap. Let's actually see where that consequent encouragement comes in at. Black. We only open above it, we never really closed above it. Risky entry, because we're already pretty extended. And it's pre-news. Check it out on a 15-minute time frame. So we just filled the entire 15-minute bearish fair value gap right here to the tick. Do we see that? To the tick, right here at 4432.25. So if we want to continue lower, I'd say we're going to use this order block right here, paired with the mitigation block, breaker block, paired with, ES already haven't taken the buy side. Well, NQ still didn't take out Friday's high, so I think that's going to be an easy draw on liquidity for NQ. And if NQ goes up, I guess we could see ES go up with it. Otherwise, we're first going to take the low after making it look bullish, trapping traders short. We're going to see a thinned order book very soon, 2 minutes before CPI news drop. No, it's 8:50. No, it's 8:28. Yeah, 2 minutes. Oh, we were simply wrong about this, and we're going to use the 2022 setup with a 61.8 fib retracement to deliver lower. But yeah, well, during CPI, we usually get some whipsaw action. Let's see what price wants to do. 1 minute to go. We're still respecting this inversion and this market structure shift breaker block right here. So we could use this as a breaker block. But of course, understanding CPI news coming in, thin order book, doesn't really have to be respected. But we still try. Breaker block right here. Could look at the most recent 2 up closing candles really. But let's look only at the first one and see how precise wants to be here. 30 seconds until news. Structure is right now already, if we go long, telling us what it wants to do, unless we get a liquidation wick to quickly sweep out the stops below the HR low or below this low before we continue up. Both is possible before news. That's why we don't trade it with funded accounts. And also not with CFD accounts. They just slip the shit out of you. Alright, CPI. Look at that. What did I say? What did I fucking say? And there we are. We didn't even get filled on our stop. No, okay, we got filled. But see how long that took? See how long that took? How the setup is there, but we still had that stop hunt? Market structure already told us what price is going to do, but yeah, because it's CPI news and there's basically everyone's removing their orders prior to it, we got stopped out right here. I mean, yeah, we called it. Breaker block entry. We respected it perfectly. And well, I mean, 40 points. I just want to quickly check what Bitcoin is up to. Binance. Did it also shoot up? Yep, also shot up. With the CPI news event. But didn't take out the low yet. Now CPI isn't over. But it's nice to see. Well, thank God I recorded that. That just goes to show how powerful market structure trading is. And I've said, possibility is there that we get this wick, and it's not really worth protecting with a 20-point stop because, yeah, slippage and all that stuff. Unless you like to gamble. With prop firms, you can't even do all that. So, yeah, I mean, there we go. Hi, Volker. That was crazy, wasn't it? We're like, oh, okay, what's happening? And we just saw the wick and immediately being all the way up there, like, far out. That's cool. Just like we said. The news delivered. The setup that was already in place. We took the Asia low. We had our breaker block right here. Had our inversion fair value gaps. That's why we entered here. Yeah, well, but long story short, 10 seconds before the news came in, I said, potential is there that because of a thin order book, we get a quick wick to the downside and do some whipsaw action before we take our stop, our take profit target. So I actually want to see if that last trade first hit our stop loss. Yeah, it first hit our stop loss. At which level? History. Stop loss filled at... Okay, some spread. Some slippage, but I'd say acceptable. We had our limit order right here at this low. 4424.5. And we got filled at 4422.25. So basically... down here. That's 2 points. Not too bad. If you would have traded that with a CFD firm, you would have been filled somewhere down here. And they can manipulate that. If you don't believe that, watch the video I shared in the VIP chat with the account manager's desktop. If they have their own MT4 or MT5 server, they see all that. They know, okay, we've got some retards trying to gamble on the news. Alright, their stops are accumulated around this area, and we can click one button and say, okay, their stop's not going to be filled here, they're going to be aggregated at a much worse price. They failed their challenges and we made money. That's why you don't trade these events. And even if you try to get a fill up here, you're gonna get filled up here. It's not how it works. Let's look at this entire thing on the higher time frame. We broke the trend line. We're above both daily bearish fair value gaps. Let's see if we can close like this. Let's take a look at NQ. Yeah, same story. Had to stop hunt to the downside and continued further to the upside. Take a look at the daily here on NQ. NQ almost back at this buy side liquidity, so this would be my next target for NQ here based on a daily high. We kept holding perfect support on that trend line. I think if we can close the daily candle something like this, we're gonna see highs being revisited. All these trend line highs, potential buy side liquidity. We already took this daily high right here. So order is taken without any kind of a retracement. Just really, yeah, I don't know, putting a cigar on the, I don't know, on the traders that try to short this, especially day traders who had a bearish bias, I'd say. Like really putting them into pain, like not giving them a chance to mitigate their loss. Let's say they got in short right here, really anticipating lower lows. Well, no. Move back to the upside, and they might still be hanging around because they still have that slight hope we're going to reject from our retail trend line. We break above it, and they might still think, oh, this could be a fake out, and we still retrace, and I could get out at break even. Nope, they don't offer that opportunity. They are forcing margin calls, basically. They know where every trader stop loss is. They know how close they are, how much money they have left in their account, how far they have to move price into a specific direction before, yeah, they take the money from their customer's account into their own account. That's how the game works. That's what you sign up for. And the only way how you can break that cycle is really by being in line with order flow. Being able to, sometimes even quickly switch your bias. By the way, I'm not trading the trade day account today. In case you wonder, it's not worth it. I mean, look where we are at right here. I'm not gonna take a market structure shift up here. It's next to impossible on the 5-minute time frame unless we get all the way back below here. During CPI, we usually tend to fill our inefficiencies, but I think can be happy with what we've caught. DXY said goodbye. Daily time frame. I know so many traders on Twitter who caught this volume imbalance to be hit. Well, sucks. DXY keeps on trending further to the downside. Sell side below here. Let's get rid of these tiny little lines. I would really expect DXY to continue into these lows now with that CPI news event. That should be pretty much confirmed. 1-minute time frame. 2 huge inefficiencies. So at this point in time, of course we could hold support on the highest one, but this is a liquidity void. If you want to take that entry, yeah, okay, but where are you going to place your stop loss? You're willing for a 50-point stop? I don't think so. I don't think we have the pockets for that, even if we use micros. CPI inflation takes a dip to 3.2%, beating the forecast 3.3%. Let's take a look at that on Forex Factory. So we actually had bullish news. Forex Factory. Forecast 3.3. So inflation is decreasing, I think we could say from here. DXY value sinks. Euro US dollar, pound US dollar, or the inversely correlated pair where we have the US dollar as the behind the dash line basically are going up. USD, where we have USD in front, is going down. Pound JPY, not sure how that works there, but well, I guess there's also some correlation here. Let's take a look at EU. Yeah, well, what do I have to say? I feel sorry for, well, I don't know, maybe if they're swing traders. Nah, there's just no liquidity available. There are no orders in the order book, and every prop firm, every broker can manipulate that even if your stop loss wouldn't have been hit, they simply open up the spreads, adding a 5 pip spread, and everyone is going to get stopped out here with slippage. No way in the world that even if you had your stop loss down here on a CFD firm, didn't take that low. They knew how many stops were down there. Boom, quickly picked them up. It's a game we play. Oh, we kind of don't play during CPI news. Any questions, guys? I mean, there's really not much more for me to do. We started doing some tape reading because, I don't know, the interest was there. Let's see, yes, set 2023. We've went over the entire London session using my own tape reading approach. We took the short from right here into Asia sell side, understanding that the old longs are likely not going to get the chance to get out at break. Even after this initial drop, we had our trend line break right here. We took an anticipatory entry right here at this high, actually a perfect zero tick drawdown entry. And yeah, we just placed lower, breaking the trend line, leaving behind inversion fair value gap and a unfilled volume imbalance. That's why we kept holding resistance to deliver into sell side. That's why we took profit. And now understanding that shorts are likely still in the market, only a few took some profits here. With their stops above each and every of these highs, we bounce off the 50% and this white box right here, that's the new week opening gap on the ICT indicator right here. I made it white because, I don't know, on this chart background it doesn't make a lot of sense, but on this one you really see it stand out here. We keep on pushing. But yeah, we bounce off the new week opening gap. We move away from it with momentum, forcing all these shorts from this high right here with equal high buy side and this buy side above. Likely to close their positions, just helping to accelerate the move. We close above the volume imbalance right here, but we never got the retest. I had my limit order set right here, but we simply continued to take out these equal highs and these equal highs, so I removed the limit order. Then we rejected and closed right here where we did, leaving behind a nice 5-minute inefficiency. At this point in time, really not worth the risk to me to enter based on that. But we would have expected exactly that to happen. We have the midnight level, new day opening gap, inversion fair value gap, bullish fair value gap here. Huge overlapping confluence right here in that darkest area right here. Take a long of the midnight. I mean, the risk was acceptable if you enter right here with a stop right here at the old low. You also have the new week opening gap that could potentially hold support. Only if we would have seen a candle close below the midnight level, it would have been red flag number 1. If we see the close below the bullish fair value gap, we take partials or we secure, cut some risk. at 1 point. Let's say we get out at 2 points. I'd say that would still be worth the risk. Just following price here. And if we see the close below, we can still play the shorts. We didn't see the close below. Instead, we got the push back up. Momentum candle. No wick to the upside. Rejection wick to the downside. We close above our old bearish fair value gap that has been used as resistance to break the trend line and deliver into the Asia sell side liquidity pool right here. We took that, we understand that. After doing that, we get a strong push away from it. Displacement to the upside, structure shift, bullish fair value gap. Close above our inversion fair value, or bearish fair value gap, turning it into a inversion. Closing above this volume imbalance, which has been respected, and also this volume imbalance right here. Hold support, perfectly respecting with the body, holding support on this inverted volume imbalance, if you want to say so. Continuing higher to retest the mitigation block right here. Failed to make a higher high, displaced to the downside. Opportunity for market makers and retail traders to get stopped out at break even before CPI news if they were in longs, let's say from somewhere over here. And I just, hope to get out at break even before CPI. They had the opportunity right here. And what did we do after closing above this high? A confirmed higher time frame market structure shift, lower low, lower high, lower low. We close above. So this right here would have been a market structure shift. Market structure shift bullish. The news are being put in place. But the setup is already existing on the chart. Yeah, we got the wick. We speak about that every time. Thin order book. There's no orders at all. Especially on CPI, they do what they want. And 30 seconds after, market makers start again to put liquidity in and screw all the traders. So basically an algo is taking control over that at this point in time because it's really quick. Yeah, but this was the tape read. Breaker block, market structure shift, 2022 model coming from the low of the day. Yes, we've been stopped out by the stop hunt wick. That's why we don't trade CPI news. This was just a paper execution. But let's see where we are at right now. 5-minute time frame. Let's drop down to the 1 minute. Well, I think now is the time where most of the traders end up getting chopped. We'll see what happens at 9:30, but if you put probability of a nice setup now on a scale with the probability of not getting a nice setup, might end up at 50-50, which is not good enough really. But yeah, for CPI London price action, we saw pretty good movement. Agent Smith, you fucking gambler. I lost 6k because I had a stop loss. I would have been up 10k if I didn't. Reset, $40, lol, next time, no stop loss. That's the lesson. Yeah, of course, yeah, up 6k, but still. The setup was there, we anticipated it, go 15k. With a prop firm. Yeah. So you were positioned before the news and then spread slippage. Well, if I didn't have a stop loss on the apex, well, can't do anything about it now. The ship has sailed, the train has left the station. No point in trying to buy the reset immediately, trying to get another 60-point move to the upside. That ship has sailed. Now market makers are back on, playing with retail traders. Not worth the risk. We also were long, stopped out, otherwise we would have caught a nice, let's see, from our entry breaker block right here, 40 points. No, we're almost at the 4,500 level. Take a look at NQ. Still continuing bullish. The DXY took sell side now. Nice. But yeah, guys, unless you have any questions or you want me to recap something specific, no point in trading post CPI even on a 1 minute time frame. Of course, we would just expect bullish order flow to continue, but is it worth the risk? I don't think so. The range is super big, so 5 points will only be a small scalp like this of the highest bullish fair value gap. Let's put the stop loss below this low. So you don't need a big movement in order to, like, I don't know, secure 5 points. Simply wait for inefficiencies to be left behind, trade it back into, respect them with wicks, target 5 points, 50% of this wick. The same way we tape read it at low of the CPI news candle, but now almost 50, 80. We started at 430, yeah, 50 points up higher. But we can see bullish fair value gap, respected from a bigger bullish fair value gap, hit our 5 point target. This would have been $250. We could close our charts now and call it a day. As a New York session trader, we hit that 5 point target, we reject. Right now, would expect support from this volume imbalance if we see the close below. Not ideal. Wouldn't keep holding on that trade. Had 2K on my other account and passed my TP goal. Nice. Easier said than done. Easier said than done. Just $500 for the next 6 days, yeah. Been there. And you still end up blowing the account. Sometimes. Happened to me at least. Well, I don't know, guys. Do you have any more questions? Do you want to see anything in specific? I mean, I started the live stream at around 1 p.m. or 12:30. Got a message on Telegram here. Yeah, what did I want to say? Where we recap the entire London session. I've got the recording. No, I don't have the recording because we spoke a little bit about ICT, but nothing in particular. Yeah, we kept respecting the volume imbalance right here. And we just spoke about order flow trading and how we can use that to our advantage regarding what market makers do, how we can think like a market maker. Recapping this entire London session, identifying the fake out move to the downside, the bounce off the midnight level right here, holding support on our old inversion fair value gap. Well, entry like this, paired with 2 volume imbalances, midnight level, stop loss a little bit below that. So entry, sell, buy limit order right on here, anticipating a manipulation move with all these equal highs up here to continue to run them out, move towards our previous day's high. Well, I'd say it's worth the risk. 2.5 point stop, 2.5 point target for a quick 1-to-1. Order flow right now is only showing bullish signs. We left behind bearish inefficiencies. We had 2 bearish inversion fair value gaps right here. Old bullish fair value gap, close below. We would expect resistance, but once we close above, also with this new volume imbalance, we expect support. That's exactly what happened here. We've recapped that. Spoke a little bit about the way I do tape reading on my funded accounts. The way I actually got funded with Apex and Topstep, and Topstep I used the Scalper Pro strategy, so mainly Apex. Still, it needs more discipline than you would think initially, because if you take a loss, you give up hope a little bit, and yeah, I don't know, it's never as easy as it looks most of the time. But eventually you get there. 5 point target would have been hit. London session is done. We run the buy side liquidity pool. We consolidate in here after hitting that major objective, leave behind equal lows, and really that's, if you watch the Beat the Market Makers video that I sent to the Discord chat earlier, right here, VIP chat, it's really worth looking into that. It's a long video, but he talks about some cool stuff, and I think that it's helpful to get to know your enemy, really. Not your enemy, but what you're up against. And this video really gives you a good feeling of what you're up against. And after watching this video this morning, looking at price action, I entered short right here on this candle targeting these equal lows. Moved my stop loss afterwards to break even, but decided to just close the entire position for the funded account here because I anticipated bulls to be trapped inside this area and they want to quickly try to stop them out. Breakout traders, FOMO traders after seeing the previous day's high being hit. Consolidate after that objective, touch the high one more time and reject, entered short around this area and hit my profit target right here. And then I expected this to be the fake out move to the upside, but well, I've been proven wrong. This was the fake out move to the upside, and I don't know, doing the tape reading approach, bullish market structure shift, bullish fair value gap, inversion volume imbalance, order block, this all looks bullish except for these equal lows below. But I mean, wouldn't hurt if we get another high above our previous day's high, really. So taking this long right here of the fair value gap would have been immediately negated. And this really brings to show all we did was take out this high, trap volume up long, up high, below the previous day's high, and quickly run out. All these stops below these equal lows, London session low, and then because we didn't capture that on the live stream, just right after the London kill zone right here, one last manipulation up. And even if we would have entered long here, after this candle, I would have immediately simply reversed the position because all price is telling me at this point in time, going with the flow, is shorts. We have trapped volume to the upside. We have a momentum shifting candle with the new 15-minute cycle at the 5:30 candle here on the 5-minute time frame. Target 5 points, target sell side liquidity, be quick to move the stop to break even. We entered at high of the day. Equal lows have been taken, not really far away from that, not giving a retracement into the fair value gap. Why? Because this would give these trapped long traders right here a opportunity to get out at break even. We want them trapped up here if we want to follow the market maker and quickly stop hunt them. We can come back into this area later on and still hold support, but we want to make sure that they don't have the opportunity to get out at break even. That's all it's about. That's why the only entry that works here is a market execution entry, not a single fair value gap until we close. Well, we had a fair value gap right here, but it's the lowest fair value gap that has been made available. You like your entry up high, otherwise you could end up getting stop hunted to the opposite side. So entry right here on that close, chase lower, trade stop loss to break even because we didn't catch the entire high. Only way we could have done it would have been a turtle soup entry, anticipating that already, but that's kind of hard to tell. Target the equal lows, mitigation block in the end of the day, continued lower and lower and lower. We took out the London session low here at 315. After we took that out, we left behind equal lows. Could look at all these equal lows from here to the left. Right here, equal lows, induce liquidity before we take out the Asia session equal lows. Only take out the highs, put in higher lows in place, forming a trend line. Trap retail traders to think it's going to go long, market structure shift, bullish fair value gap right here, without ever giving all these old longs a opportunity to get back out at break even. Let's say they got in somewhere around this area. If we would have moved all the way up in here before hitting their stops, they could have gotten out at break even, and this whole idea wouldn't have made sense. That's why we entered right here. Also had a limit order on this turtle soup entry, rejected, closed below our bullish fair value gap. How did we close below it, leaving behind a new unfilled volume imbalance? We broke the trend line. At this point in time, we could have added safely one contract right here for a 80-20 opportunity, I'd say. Add one contract here. We can close the added position size if we immediately close back above it. That's not what we would expect or anticipate from this inversion fair value gap with the bearish volume imbalance, unfilled volume imbalance. We just filled that, hold support around the new day opening gap, consolidate, retest it one more time, and eventually break below the Asia session low. Market traders, FOMO traders, hop into that somewhere around this area. They're not happy with the profits they made. We kept holding perfect to the tick support on the new week opening gap right here, this white area. We've been respecting that before very well. Never closed below the 50%. Immediately rejected. Boom. What are we doing? We do damage to all these late shorts right here that didn't take profit yet. Clean the book up. Market structure shift to the upside. Close above our unfilled volume imbalance and inversion fair value gap that helped us to deliver into our new week opening gap Asia equal low target. Close above it. I had my limit order set right here on this low, but we opened up and immediately just pushed to the upside, targeting this high right here and these three equal highs, after which we rejected, eventually still ending up to hold support right here. So that happened, and we leave behind this bullish value gap, inversion fair value gap, midnight level, new day opening gap, this gray box down here. We hold support in this darkest overlapping area. So we have the bullish fair value gap, the high of the inversion fair value gap, the midnight level, and the new day opening gap overlapping right here at 4427.5. We hold support. We didn't take this trade because, well, felt too risky at this point in time with CPI news. But it still played out. That's what we would have anticipated, and we already spoke about how we can manage our risk once we see something that we wouldn't expect here, like a close below all these areas, a close below midnight, a close below the inversion, a close below the bullish fair value gap. Breaking that, close below the 50%, which is lining up perfectly with that midnight. Close the position out early. It could still play out, but yeah, we don't have to enter into the trade right here on the midnight level with the anticipation that this is going to hold and continue up higher. So knowing that, if we close below all that, there's no point in us waiting for our stop loss to be hit. We can simply cut our trade and get out maybe with only 2-point stops instead of taking the full stop out at the low of the new week opening gap, which would have come in at 3 points roughly. So we manage our risk actively while doing the tape reading. If we see something that's going against our bias or what we would anticipate, we also broke this trend line right here. 1, 2, 3 touches, close above, perfect retest. So we can really see how all these confluences align. If you use trend lines, fair value gaps, support and resistance, I don't know, just market maker confluence, we shift market structure, we can still, just looking at the bodies right here, see how well we respect this old bearish fair value gap here that delivered into the Asia sell side after closing above it. We open up with a bearish volume imbalance, not ideal, but still, wicks to the damage, keeps holding support on this old volume imbalance that has been respected regarding candle bodies. After now closing above it, we hold support, close right here on our old inversion fair value gap, deliver up higher, hit the mitigation block, reject, open up with a bullish volume imbalance. We tried to enter on that, we cut some risk. Once we saw that the bullish volume imbalance right here has been closed in, rejected from the 50% of our bearish fair value gap and this old London session fair value gap that aligned nicely with the initial 3 a.m. high. And then CPI news came in, we had our breaker block set up, and the body still respected this fair value gap here perfectly. We didn't have a new fair value gap, we didn't need to go back into this has already been mitigated. We've been in the long, but unfortunately, due to the thin order book, we get that liquidity hunt or run for liquidity to make sure that no one's on the correct side unless you simply don't use a stop loss and you have enough margin to cover that. If you do have that, then, well done. If you don't have a max daily stop out or a, what's it called? you are allowed to trade news, then you're all good. And yeah, we continue to the upside with the setup that has been put in place right here. And it's hard to, yeah, I don't know, trade against that, even if we have CPI news. That's what the market makers are going to do with the CPI news report has already been put in place before we even had the news event. Of course, yeah, we would have been stopped out. But once again, look at the bodies, we respected that. We can't control the wick right here on the CPI news event. It just goes to show how well you can make sense out of, yeah, simply going with the flow, tape reading, trading price action with ICT concepts. Let's go to our 1 minute time frame and see what happened here, because we managed to take out the high. Yeah, perfect. That would have been a scalp. We wouldn't have entered on this bullish fair value gap right here. It's just too big. I want to see if we can hold support here. Okay, we leave behind new signs of new bullish order flow right here, bullish fair value gap, and on there bullish fair value gap. We try it like a feeler entry and see if price really wants to continue, maybe above this old high. This would be our overall target. Take partials after 5 points. So we try with micros. If it's too much risk for you, place your entry order right here. Stop loss goes below this low. This would be the invalidation risk, roughly 5 points here. Once we see, if we would have seen the candle close below this bullish fair value gap, we could have taken off some risk, like cut your trade in half. If we also close below this fair value gap, exit the full position, and you never would have hit a 5-point stop out. Active risk management. But what did we see? We only wicked this area twice, still respected it, went sideways, and then delivered to the upside. Bullish volume imbalance, remained open, retested that bullish volume imbalance, continued higher. Next bullish volume imbalance, remained open with a retest, delivering into buy side for a nice, an easy tape read further to the upside. And that's the way you do tape reading. You don't stick to a specific setup, you just go with order flow. CPI has been bullish. We already respected this bullish share value gap right here. If we map that out, 50%. Never got close to that. Reacted bullish away from it, closed back above it, leaving behind a new 1 minute bullish fair value gap. Of course, that's a 1 minute time frame. You didn't see that on the 5 minute. You see lots of stuff on the 1 minute time frame, really. That's why I don't do the tape reading stuff on the 1 minute, but it still works. You just have to be, yeah, more disciplined, really. That's all about that. If we keep on going, we understand that we took buy side now. We took the long of this bullish fair value gap right here after closing back above our highest bullish fair value gap. So what do we have right here? We have a old unfilled volume imbalance. We close back below it, use it as resistance to deliver lower. After, we understand taking buy side above this CPI high, basically. We took the high, we closed below it, bullish fair value gap, close below it, turning into an inversion fair value gap. So what would we expect after closing below? We'll place a sell limit order right here. Let's see. See if we can tape read that. Stop loss, I would place it really. Let's use a 5-point stop here and target. Did I miss anything here? Yeah, we have one more bullish value gap down here. Tiny, tiny, tiny one. We haven't repriced into that just yet. But that's how we would do our tape reading approach. Now we would expect resistance here. If we close above that, we would cut our risk. But unless we don't, we're still fine. Let's see, ideally we also close below this bullish fair value gap right here. Now having filled it, really makes sense to keep your stop tight. Don't want to see it bounce off here. Okay, so now we open up with a bullish volume imbalance. Not ideal, but we still respect our highest inversion fair value gap. Let's see, volume imbalance right here. Let's see, I'm not looking for a 2022 setup today. We're just going to do some tape reading since it has been requested. Good old tape reading. Alright, so we took the low. Now we have a short-term high right here. Could also just consolidate for a little and still potentially hold support on this bullish fair value gap until we get the confirmation close below it. Alright, this looks like this, and this is our bullish fair value gap that delivered into the high. So ideally we would like to see this volume imbalance to be closed in and not to remain open. Okay, we close it in. That goes in line with our order flow theory. I'm going to see the slow to be taken and the close below this bullish fair value gap. Otherwise, we're likely going to revisit this high. And then if we fail to hold this bearish fair value gap, I'd say the short idea would be invalidated. So right here on this volume imbalance, we could safely add one contract for the inefficiency to be delivered nicely. Let's see, we just consolidate here after the next expansion, after taking buy side. We have a couple more minutes until the New York Open. But yeah, on the 1 minute chart, you're just super busy because there are so many things to look at. Well, if we would simply make the switch to the 5 minute time frame. Okay, we have a 5 minute bullish fair value gap that we're trading inside of. So also counting in what we see on the higher time frame. Likely continue up higher from here. After sweeping the high until we get the confirmation close below. But we get most of our information from the 1 minute time frame. Still looking for the shorts. Until we get reason to not believe that anymore. Let's take a look at where that 5 minute fair value gap is coming in. We're right at the low of the 5 minute. So actually, this 1 minute bullish fair value gap is overlapping perfectly with the low of the 5 minute. Just going to secure that profit here. Where did I get filled? Right here, that's okay. Now we open up with a bearish volume imbalance. Let's see how that plays out. But we don't want to go against the 5 minute bullish fair value gap right here until it's has been invalidated. So we just take a quick scalp of our 1 minute inversion fair value gap right here. We entered right here at the high. 1.5 points. Better than nothing. It's already 80 bucks or something. And how do we react from this area? Even though we open with a bearish volume imbalance, we go back up. So what do we target after taking sell side? Short-term highs right here. And inefficiencies from the left. Right here. Now we have equal highs and equal lows. Now we're in that broker gap time, where they reevaluate and see what they do for the New York Open. Look at positions, where's everyone's stop at and stuff like that. What is nice to see that we still had a nice rejection wick here from our area, but now we have equal highs, equal lows. Still inside the 5 minute bullish fair value gap. We'd have to wait until 9:15 to get that confirmation. I don't know, guys, on Discord, does this approach make sense to you? Just trying to keep everyone entertained. Not looking for setups on CPI Newsday, but I mean, we caught some pretty nice trades, not on the 1 minute, on the 5 minute time frame. Using that approach, just making sense at least for ourselves, what price action is doing. Thinking of what our opponent is doing, the market maker, while we went short right here to hit the Asia sell side. Perfect entry, where we didn't continue higher because that would have given the longs a opportunity to get out at break even, like right here. Here they got the opportunity, if they entered long around this area, to at least, well, get out with a minimal loss, better than closing down here. After taking Asia sell side, seeing the aggressive displacement away from it at 755. New hourly candle, bullish fair value gap, midnight, new day opening gap, inversion fair value gap, break of the trend line, momentum candle to the upside, respecting all our old bearish fair value gaps, inversion fair value gaps now after closing above it, after we run using this bearish fair value gap into sell side liquidity, displacement, bullish fair value gap, midnight level, like we said. And even if we're wrong and we see the close below, we can still be quick enough to not take a full, let's say we enter on that midnight level, a full 3-point stop. We can, let's say, for example, exit at 2 points if we see the candle closing below. But trendline break, short traders being trapped in the market. So it's very likely that we're going to run for these 3 equal highs and this buy side liquidity right here. We tried to get long on this volume imbalance right here. That has been used as resistance, a unfilled volume imbalance. Old bullish fair value gap at that same level, use it as resistance after we broke the trend line right here, continued lower to hit the target. Now, from the new week opening gap, after pricing it in perfectly, low of the new week opening gap, this white area, rejecting of the 50%, never close below the Asia session low on the 5-minute, quick and sudden movement away from it, doing damage to all these shorts that likely entered during the last minute. 1 push, 2 push, 3 push. Liquidate them or make it, or just target their stops. We try to get in long then right here on this inversion, fair value gap, volume imbalance. But instead of getting our fill, it just immediately continued to run this buy side, leaving behind this fair value gap. Afterwards, after running the buy side, it retested it right here. And then we saw the support. We didn't decide to engage here, but we continued higher with a nice momentum candle, no wick to the upside. Eventually, we shifted structure. And I also want to point out that on this candle here at 805, we closed above our old bearish fair value gap that has been respected perfectly to the tick regarding the candle body to deliver into the Asia sell side. Now closing above it. Next candle opens up with a bearish volume imbalance, holding perfect support inside this inversion fair value gap. Not closing below it, respecting it perfectly. No wick to the downside, immediately push into our mitigation area. Fill in this entire bearish fair value gap, still respecting our old London session support and resistance, lining up with this fair value gap right here. Rejecting, hitting the breaker block, that highest up closing candle after making a low, lower high, lower low, higher high. And then we've been on a long right here with 2 contracts. We took off one because we closed back inside the breaker block. Now we had, I don't know why, I don't remember, would have to watch the recording. But yeah, we've been on the CPI long, but we spoke about the possibility of because the order book is very thin at that point in time, for a quick stop hunt. It's really rare that we don't get a stop hunt before we move up 50 points. Otherwise it would be 350 points within seconds on a 2022 setup. We have the 2022 setup here. It's obvious. We took session liquidity right here. Even if you would have gotten in right here on this fair value gap, market structure shift or break-in structure right here, well, the stop loss would have been very likely been hit. Same as ours did. And yeah, now we continue to the upside. And we do that same stuff then up here on the 1-minute time frame. It's much harder. You understand that. We looked at the long from this bullish fair value gap into buy side, secure partials after 5 points. And if we see that fair value gap being invalidated, we exit. We cut risk. And then we looked for the short right here from the inversion fair value gap, secured quickly, because we understand that we are on this order block A right here. We can see that the body of this candle has been perfectly respected. Never closed below it. So we had this little order block, down closing candle within the uptrend. We had the low of our 5-minute bullish fair value gap, which lined up with our 1-minute bullish fair value gap right here. We've been hitting that. Now we took out these equal lows, holding support on that order block, moving away quickly from that, leaving behind a new bullish inefficiency. that looks to me like we want to go for buy side up here. So let's see. Go for a little scalp. Stop loss goes below these lows. We can still be wrong. We just go with the flow and trust the intuition right here. And see if this bullish fair value gap wants to support price now after taking the lows. If it doesn't, we can cut our risk and get out with a minimal loss. Because we anticipate that it's going to hold support there. If it doesn't, we're not really interested. So now we already repriced it in perfectly. Equal highs, equal lows. We want to see these equal highs being taken and potentially redeliver into this left behind 1 minute time frame inefficiency volume imbalance. Trail our stop loss. We already saw what we wanted. We filled the bearish fair value gap right here. We're pushing. No reason to get stopped out down there. Hold support like said on our order block. And we hit our take profit target. Top right. Quick scalps in and out. And that's why we do that. We don't look for a 10 risk reward on scalps like these. We target the most obvious liquidity pool. Now we've took those equal highs. We still didn't hit the bearish fair value gap right here. And as long as we're respecting this bullish fair value gap, I wouldn't expect these equal lows to be taken. But once we see the close below, this would be the next target. We still have the order block to potentially support price here. Like we did right here. Came into that area. Consolidation. Now it's 9:20, 10 minutes until the New York Open. And I'm really running out of breath. Cool. Yeah, earlier before CPI, because there's really not much for us to do. There's not going to be a nice 2022 setup with high probability. I don't trade CPI news for the funded account, neither for the challenges. Even if we get one, who cares? Like, sometimes it's better to just sit out. I mean, yes, we saw the 2022 setup at the low. We spoke about that already. Right here, market structure shift, fair value gap. Well, if you would have used a decent or no stop loss at all, structure shift, 2 to 1 or target the previous day's high. Played out nicely on NQ. So that same manipulation move to the downside on DXY. Yeah, we've already hit that low. Nice. And on EU, we saw that same thing happening. If we go to the 5-minute time frame, big wick, quickly, yeah, grabbing all the liquidity from the entire day, stopping all the traders out, add some spread, open up the spread basically. And brokers can do that by simply logging into their MT4, MT5 manager. If you haven't seen that video, watch it. I think it's really helpful. I've said that before, but that's what an account manager's desktop looked like in MT4. I don't know, like 10 years ago maybe. Well, I think they have even more insight to who's close to getting stopped out, how much money would we make if we go to a specific level like 4410. How much money would we make if how much money would we miss out on if we don't go to that level? Is it really worth it to pick Matt's single contract up down there? No, not really. We would give all the other traders an opportunity, the short traders that we've trapped, an opportunity to get out, while Matt bought their stop loss with us. Yeah, no, we can't do that. Otherwise, yeah, the people we try to trap have an opportunity to mitigate their loss. We're like, I don't know if that's a good comparison. But if you want to be profitable, I think it makes sense to be in line with what the market makers do, who they trap. Like a tick, basically. If you guys know what a tick is, that blood-sucking thing that, it's not really healthy, but it survives. We don't have enough margin or capital to move the market. we have very tight stops usually. So we have to make sure we're aligned with what market makers are doing, like we spoke about right up here. Well, we could have taken a short after trapping, like right here, I looked at the chart and I thought like, okay, we're surely gonna take out this buy side. And I think 70%, or let's say even just 50% of traders believe that, and they try to catch the long because we've been bullish the entire time after taking out that previous day's high already. Okay, we retrace, we hold support on that bullish fair value gap. We kind of could see a break in structure in here. Yeah, we have equal lows below, but yeah, maybe it's still gonna take that high. Well, I want to make some money. They jump in on that, immediately get stopped out, or at least, yeah, I don't know, regret that they entered on this bullish fair value gap. Even if we would have done that, we would have closed the trade by this candle close, or simply would have pressed turn around the position. So out of your long, we're gonna now make a short trade, understanding that this was a last fake out move before we run out these equal lows. So we get in right here, we take a super small scalp, 2 contracts maybe, secure 1 point, move our stop loss to break even, understanding that if we're right, we won't really see the retracement, let's say at least above the 50% of this inefficiency right here. We didn't even come back at all. So looking for the 2022 setup here, even if we would have shifted structure before, why don't we retrace all the way back up into this fair value gap? It's simple if we think, I don't know, like a market maker or like a criminal basically. Traders are trapped in a long right here. That's what they try to do right here. That last FOMO push in, 3 explosive candles to the upside. Hold support. A, B, C. We would look forward to take this high. We get a nice discount entry on this fair value gap. Hold support, whatever you use. They get long. They trick them. That's that last fake out to the upside without really taking out the highs. Yeah, and then this plays lower. And by the time we see this candle closing below the volume imbalance and this bullish fair value gap right here, with no wick to the downside, it opened up with not much bullish momentum at all, at a new 15-minute cycle. So 5 a.m., end of the London kill zone, initially delivered lower, leave behind equal lows, and then with that last 15-minute cycle starting right here, trapping traders to the upside. New 15-minute candle opens up, says, nah, we're gonna flush them down the toilet. We don't give them a chance to get out at break even. All these trap longs continue lower. Trailing our stop with a healthy distance, taking partials at equal lows. Then we hit the London session low right here. What did we do afterwards? We took that trade right here. 1 minute time frame, where are we at? We actually managed to. We're gonna look at that later. Let's finish off with what we started here. 5 minute time frame. New York didn't open just yet. Left behind higher highs and higher lows. So we only took highs, always rejected, putting in some sort of a trend line here, leaving behind all these equal lows after taking a major swing point, the London kill zone low basically. Close below that, we don't really have a fair value gap to use here other than this old bearish fair value gap where we basically entered on right here. Understanding that if we retrace too much, we give these other traders an opportunity to exit at break even. So we look for a low hanging fruit entry. We could take the anticipation entry basically, anticipating the move to the downside here of this bearish fair value gap. If we would have seen the close above, could have started to cut some risk and expect resistance around this area. We got lucky, or we got rewarded. We continue lower, leave behind a bearish volume imbalance, open up with a bullish volume imbalance, reject that, initially holding support on this old bullish fair value gap. We open up below it with a new volume imbalance without even retesting that volume imbalance. Break our trend line, hold support on that new day opening gap, reject from our unfilled volume imbalance, inversion fair value gap, consolidated for 5, 10, 15 minutes, 740, 7:45, new 15-minute cycle delivered into the new week opening gap and Asia equal lows. And we already spoke about that a couple of times. I don't know. I think maybe it's just me, but that's how you can make sense out of price action. And we did the same thing right here during the London session in replay mode. Yeah, initially, coming off this high and seeing this pin bar candle, just listening to what this single candle here at 305 tells us. Okay, initially, very likely that a trap traders long right here, because at some point in time, the close of this candle was right here at this high. So they thought, okay, we already retraced into the fair value gap if it's the ICT community. We kept on holding support. Now we are all the way up here. I tried to get a market order in. At least that's what they want you to do. They trigger that. They're masters in triggering us into false trades. But understanding that once we wait for the candle close and we see it close right here with this strong pin bar, could look for a quick scalp, stop above here at 2.5 points, take partials off at the midnight level and see how we behave after we left behind that bearish fair value gap. See if we want to use this to deliver into the Asia sell side. Already having secured 1.5 points here, we get back to our break-even level and we hit the high of this bearish fair value gap. We close right on the high. We also had this inversion fair value gap here because we closed below it. What did we do? We closed right at the high above the 50%. That's not ideal. And we open up with a new bullish volume imbalance. That would have been the sign for me to cut the trade, especially since we already secured some partials and that we could be potentially bouncing off the new day opening gap paired with the midnight level. That makes sense. We had a volume imbalance here, but we didn't bother to fill that in. Every time we retrace back into the new day opening gap, we reject it, leaving behind a wick. Big wick to the downside, almost no wick to the upside, and we deliver higher. We leave behind equal highs. We can simply place our limit order on this area, inversion fair value gap, paired with two bullish volume imbalances. Our stop loss below this low right here, like I drew it up. We have the new day opening gap and the midnight level to support us, and once we see price, let's say it would have closed somewhere down here, we would have already been able to cut at least half our risk, exit 50% of the trade, because we didn't see what we anticipated. We anticipated this area being used as support to deliver into these equal highs, and that's exactly what happened. Eventually even continued up higher into the previous day's high, giving us one last chance for a aggressive volume imbalance entry for a quick scalp of this candle's closing price into the previous day's high for a quick 2 points. In line with what the market makers are do, because we understand fake out move confirmed once we close back above these inefficiencies, because if it would have been a true expansion move to the downside and not a fake out, we really would have anticipated these areas to be respected. And sometimes it happens that we close above and then still close below. Those are just the times where you end up losing, and you would still lose by choosing any other model. Like, you still end up in a losing streak. But yeah, well, then price action is just messy, and we likely do some seek and destroy consolidation type of movement. But if you're right, you're in line with the market makers, you can trail your stop with you. Practice that with micros on a 5-minute time frame, and you're pretty good. Where are we at right now? New York opened up. Yep. Let's check that out. We kept holding support. Let me remove all this here. We continue up higher. Where did we end up holding? Our bullish fair value gap, so we don't anticipate lower prices until we close below our highest bullish fair value gap. We keep holding support. Let's see what that looks like on a 1-minute time frame. We had our old inversion fair value gap. We're not here to call the high of the day. Where do we hold up to the tick? We had this bearish fair value gap drawn up already as a potential level of resistance. But once we close above it, we understand. We would expect that, we would anticipate. It doesn't mean it has to play out like that, but that's what we would anticipate. And based on that anticipation, we can enter managing our risk well. Of course, prior to the New York Open, risky, having swept this buy side now. This could be an invitation for a 2022 setup to retrace into our CPI news candle. It could be. It's up to you if you want to take the risk. I don't feel like I want to take the risk today. I already secured some profits with some scalps on my funded account. But this would be the sweep. Immediate rejection. This is a market maker template. Entry could follow right here on this candle close. Gonna paper trade it, but no, you see that? How we still ended up settling inside our inversion fair value gap? No point. As long as we hold this area and our 5-minute bullish fair value gap, no reason to anticipate anything else. It could still play out and continue lower from here, but we don't have the confirmation yet. We had our stop hunt, a big wick immediately rejected, triggered the last set of breakout traders that look to continue higher, understanding that they are trapped now. But we want to see if we truly quickly stop hunt them, depending on where they have their stops, likely on these equal lows right here. High, higher low, higher high. But so far we're holding perfect support here. It really looked like it's going to close below, but we saw that last push back inside our inversion. We also had this volume imbalance right here. And boom, we continue further to the upside. And if you're looking for something that makes sense, well, I guess that would be it. So let's see. Again, a terrible spread fill. Let's see if this bullish volume imbalance wants to deliver a price up higher. I already stop hunted the 930 low. Did the damage of everyone who tried to chase this long. Stops below the 930 low. Took that out. If this volume imbalance can remain open, we can stay in this trade. We have our order block right here, that candle that swept sell side liquidity. All these lows, holding support on this old bullish value gap. We would target our high. As a stop loss, we're going to use 50% of this order block right here. Let's see. 5 seconds to go. We want it to remain open. Okay, it remained open. We want to see a close above our old high to really confirm the momentum. We don't have a fair value gap or anything. We could only look at this down closing candle. This could still be the part where they tried to trap traders long right at the 930 open. Okay, we got stopped out at the consequent encouragement. Small stop out here. Let's check that out. Account history, 162 bucks. Let's see if we can now get the confirmation break below here. If we can see that, can try to look for shorts. But right now they really made it hard for the longs to not engage. Take sell side, bullish engulfing, bullish volume imbalance, but we failed every time closing above this old high. We got an initial push. We closed that volume imbalance in. We still yet end up holding support. Just some, CPI New York opening, I'd say. Wouldn't expect the cleanest price action here. We've seen very clean price action before that. And we just keep on bouncing here. So I stopped below our most recent stop hunt right here. Should have really been fine. But yeah, the entry long at the high of the day always bears some risk with it, especially on CPI. Entry right here on our volume imbalance, 6-point stop. 6-point target, I don't really think that's worth the risk. Could also just continue to seek and destroy here. Take a look at NQ. NQ keeps on pushing. EU keeps on pushing as well. Likely we're going to see the DXY continuing lower. The next daily buy-side liquidity draw would be 4508 if we continue further to the upside. So first of all, we have that 00 level right here then on our chart. 4,500 should be an institutional level. And the next daily buy side, we drew that up here on Wednesday, 20th of September high for 508. Not here to call a top until we see the confirmation. Can we get to close above now? Or we will reject again. I don't know, I think it's hard to believe that we're simply gonna continue higher without taking at least one higher low. Pre-New York Open. But we will see. I'd say that also depends on what the DXY is doing. If the DXY just keeps on failing and continuing lower, like it does right here, then we might just see the S&P continue lower. Yeah, and we closed above. We retested our old high and delivered higher from there. Let's see, let's see. Market is open, never give up. Let's see, let's see, let's see. Been streaming for 1.5 hours. Agent Smith would be one of those traders who have developed a pretty good gut feeling. And who can, yeah, don't have to really look for a specific model. They simply, yeah, have a feeling and execute based on that. Like we did right here. Agent Smith kind of would be the hardcore version of that. And I would suggest to not get distracted by big green PL numbers. That's very specific to his approach. And that might not suit your approach or your risk appetite. So never, yeah, compare yourself with others. Nice. Focus on yourself instead. Well, well, well. That played out nicely. Own trade or sick of a signal from SST agent. Still didn't take the high. We're failing to go higher here. Can still understand that we might be trapping traders. We could also continue to expand further up to the 4,500 level. Next daily buy side drawn liquidity would be at 4,508. So if we're gonna get the drop right here, I think they're gonna get us one more time really excited to enter these longs. That could have been a potential entry here, at least for a scalp. I was too late on that. Checking out the Discord for too long. Bullish fair value gap. Paired with our old volume imbalance, paired with this order block. Quick scalp right here. So with full focus that's required. You can't do two things at the same time or look at two charts at the same time. Especially if you do that stuff on a 1 minute time frame. And I think the real benefit of this approach is really that price action starts to make sense to you, or at least you know what to anticipate other than just waiting for a pattern to appear. Instead of being a pattern trader, you actually are interactive with order flow, trying to be on the side of the market maker instead of getting chopped up and faked out. And there we hit the target from our entry, bullish fair value gap. That's what we would have expected. Take the low, go back up, now close above our high, hold support on the bullish fair value gap, reject. If we would have seen a close below, cut some risk. 3 points backed and tagged. Move our stop loss to break even, see if we can hit 5 with our second contract on. Close right at the high. If we continue to push, we shouldn't have any issues because right now we're in line with order flow. Cutting through the old high, leaving behind a new inefficiency. Let's see if we can close bullish here. DXY hits the lowest bullish fair value gap now, but screw that. Daily buy side right up here. I think that would be the target. NQ already hit that target from monthly high. NQ hit a or is about to hit a monthly buy side target Friday the 1st of September, and ES 1st of September would be all the way up here. So guys, really make sure to watch the, what level is it? 15,856 and a quarter. Ah, damn it. Why do I always switch charts? This would have been the entry for the continuation move. Let's try it again. We want to see this bullish fair value gap to hold support. As long as we see that holding support, we have no issues believing that we can't continue higher towards our 4,500 level. Simply mark it in here. Once we see it close below, we have reason to believe that this might have been a short-term continuation up higher. As long as we hold that, no issues at all. Continuation entry, adding to the trade. Stop loss goes right here below this low as a safety measurement. We do not wait for this low to be hit. We would take off some risk once we see the close below the bullish fair value gap. Kept holding nice support around to 50%. Let's see if we can target 5 points. So for all the new members on the Discord, you never saw me trade like this. That might be something new for you now, but that's how I used to how I trade my funded accounts, and I also used to do the live tape reading streams. But yeah, I decided to try to test the 100% rule-based approach, but not on CPI. On CPI, I decided to have some fun today. Let's see. 5 point stop. Not really worth it to give that away anymore. So we moved that stop loss. Now it's too late to break even. But you can see there's no reason for us to not anticipate higher prices even on that 1 minute time frame here. There we go. Open up with a bullish volume imbalance. 5 points hit, done and dusted. Let's see if we want to move up higher to that 4,500 level, and I think Q already hit the monthly buy side. Yep, guys, if you're trading Q and Q already hit the monthly buy side, if you would go to the 1 minute time frame, well, that's why I trade ES, because it's really damn specific. We're in line with order flow, continuing higher, even from a high of the day. 5 quick points, 250 bucks in our pocket. If that would be my funded account, I'd be saying goodbye now. No point in giving that away again. Got a nice scalp. Initially took a small loss. But even with our stop loss down here, we understand. Just another retracement. Let's just try the same thing over and over again. Eventually, one of these fair value gaps is going to fail and we're going to retrace a little bit. But we don't care about that before that happens. And when that happens, we can still react to not take a 4 point stop loss. Once we see the close below, we cut risk. Otherwise, we continue with bullish order flow. It's that simple. I wouldn't recommend you, if you just started seeing me do that on a 1 minute time frame, to do the exact same thing. Maybe with a paper trading account to get a feeling for it. Otherwise, nah. And especially this with the bullish fair value gap continuations really works when we see the expansion, strong expansion to the upside. We have our daily buy side liquidity draw. We could really see this continue all the way up until 4508. With the CPI momentum, we keep on making higher highs without filling the inefficiency. So let's see if we want to get filled here. Ah, fuck off. Can I ban him? Yeah. But how? Can only do that from my phone. Report message. Spam. Submit report. Delete. Block. He posted it even into the scammer section. I don't really hope that anyone's so desperate to join that Discord. We hit our profit target, so we get rid of that long entry right here. We can see if we would have entered with 2 contracts right here, hit our institutional level, 4,500. Let's see what's happening around this bullish fair value gap. Now, we could still leave that order on, but really this would have been the nearest draw. Also understanding that NQ hit monthly buy side liquidity. We have SMT divergence going on. It's time for a rejection, but yeah, as long as we don't close below this bullish fair value gap, let's just do it for the practice. Enter on that bullish fair value gap. Until we see the close below, we're still good. If we see the close below, we exit. To prove a point here mainly. Put our stop loss below the short-term low. Target this high. On a 1 minute time frame, this is really, yeah, to your advantage, because within a 1 minute candle, not too much can change really. So you're very quick to exit and enter without taking too much of a loss. And right now we're looking pretty good. Let's see. Last 10 seconds. Now we immediately rebalance this candle. Ideally, we want to see the close above here. Continue to push. Bullish volume imbalance, perfect. That lines up with bullish order flow still continuing. So ideally, right now from our entry, we would like to see this to hold. No point in putting our stop loss further than that. And simply by entering here, we already reduced our stop below this low, which is 1 point. I think we can all afford to risk that. If we still reject from here, make a new lower low. Of course, we could still hold the fair value gap, but that's not what I'm looking forward to trade. I wanted to see the quick support right here on this fair value gap, continuation higher. We rebalance the candle, open up with a bullish volume imbalance. I want to see this remain open, ideally. Best case scenario. Otherwise, our stop is already protected at 1 point drawdown. And then it might just be time for the retracement. Let's see, 3, 2, 1. And it has been closed in. We open with a new bearish volume imbalance here to the downside. We can remove this one right here. We already reduced our risk. Let's see how this candle continues. I want to see bullish momentum. Open up bullish. Ideally, we don't want to see the rejection. 2.5 points. Depending on your risk appetite, you could move your stop loss to break even. If you're in with 2 contracts, take a partial, or simply be patient and see what happens. Wait for the next 15 seconds. It's really not that long. On a 5-minute time frame, that would take much longer. It's 9:50, 9:52. We're inside the macro. We understand that right here it's just 10 a.m. and we already caught like 10 different trades simply by buying fair value gaps in the buy program. Bullish fair value gap, bullish volume imbalance. Take profit, target hit. We're not greedy. Just look for our 5 points and get out. True magic. True magic. Well, yeah, I don't know. I think that's honestly gonna be it for me for the session. Like said, the next target would be 4508. We get the 10 a.m. open soon. We keep on pushing higher even on the 5-minute time frame without retracing or from our highest 5-minute bullish fair value gap here. We've pointed that out as it happened live. Really, gotta admit, I mean, it's perfect price action. I wish I would be trading on my funded account, honestly. I mean, been doing pretty well. Yes, we took some losses, and this was the CPI stop out. We wouldn't have taken that. But so far on the 14th, 250 bucks on that first short. Stopped out, took a $40 loss. Then we took small scalps, 50 bucks, 75 bucks on a 1-minute time frame. That was the order block long, where we've been stopped out. But then we made another 5 points. So all up, I think just today, 250, 250, 250 is 750. 750, 800, 880. Then we have to ignore what happened on CPI. We would have made sure to not even take that trade before. So those two numbers can really be disregarded. We look for trades afterwards. So 800 minus 150, 650 in profit on a CPI new stay, sorry. By managing our risk actively, simply following order flow. And order flow right now is bullish. Someone is trying to tell you it's bearish, then, well, took a scalp here, 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 here. Quick partials inside the range. We open up with the volume imbalance. Unfortunately, stop loss right here at the 50%. We ended up still holding our inversion fair value gap, 5-minute bullish fair value gap. So really, stop loss should have been down here. It would have been a little bit of a bigger stop loss for my liking for an entry up here. But, well, if we wouldn't have had a too tight stop loss and simply waited for the 1-minute candle close, would have seen that, okay, there's no reason to worry at this point in time. We're still protected from this inversion fair value gap, volume imbalance, and 5-minute fair value gap. We just took all these lows out with this order block right here. Sometimes, yeah, wicks do the damage. The body has still respected the order block. And the next candle would have already relieved us, closing above the high, continuing higher. Could have added a contract right here, but we missed that because we looked over at NQ. Volume imbalance, bullish fair value gap, boom, target the high. Cut through the high, leave behind a bullish fair value gap, target. Bullish fair value gap, we entered, boom, hit the 4,500 level. And this can continue until we hit the 4,508 level, period. Up until now, there's no reason, even though we saw this wick, to believe we're in bearish order flow. Yes, we closed on the volume imbalance right here, but look at this rejection wick. Pending sell orders were triggered up here, but they were immediately bought up from the buy broker. Target, I would say 4,508. Daily buy side liquidity. Then Q is playing around at that monthly buy side, not really moving anymore, while ES is still pushing further to the upside. And I think that should really be the target right here. We have a tiny little bearish fair value gap before we push up even higher. So right here, this would be the draw. Paired with this up closing candle, bearish order block. Bearish fair value gap. Yep. Up closing candle within a downtrend. We bounced off perfectly off the trend line, not giving these old shorts a relief, likely higher time frame like weekly shorts or something that didn't secure profits, not giving them a chance with a retracement to get back out at break even, trapping them. Those are the ones that eventually gonna pay the market makers for the move to the upside. If they allow them to get out at break even, who's gonna pay them? Who's going to lose in order for them to win? That's the question. No new inefficiencies that we could have entered on, unless other than holding the trade and simply continuing with the trend. 30 seconds to go. That should still be the draw. Let's see if we have any questions on Discord. Well done, Agent Smith. Make sure to not put your hand too long on that stove. It's pretty hot there and you can quickly burn. Your fingers. All right, continuation expansion, bullish volume imbalance. Come on, that spread is really killing me here on that paper trading account. But let's see if we can remain this volume imbalance open. This would be one of my high risk long entries, where we simply go with the volume and the volume imbalance, chasing that direction. Stop loss, I'd usually put the stop below the low that created the volume imbalance to negate that entire setup. And I would also, decide to close the trade if this volume imbalance will be closed in. So something like this right here, where we open up and we close it in immediately. That would be against my rules. And those volume imbalanced, especially these aggressive entries, they work, but don't try to trade them during a consolidation. It has to be a trend like this. All right, I like this. Happy with that. I will add on this bullish fair value gap. And this could be the time now where we actually end up losing. Let's see, we closed on this volume imbalance. We leave behind a new bullish inefficiency. So only if we close below that, I'm going to get out of this trade. Until then, we're going to stick to the buyers. We're now above the 4,500 big figure level, institutional level. We didn't get filled on our buy limit right here with that paper trading account, but understand we just hit that fair value gap high. Made a new higher high. And it's also a new hourly candle. Buy program, slightly going to add right here at 4508. Oh yeah, sorry I tuned out here for a second. Are you guys still following? Got any questions? Please ask. I'm not streaming on YouTube, it's just Discord today. Then I have also some more stuff to talk about. I reject. 5, 4, 3, 2, 1. Look at that. Look how bullish order flow is. New volume imbalance, retested the closing price immediately. That's what we want to see. Leaving behind a new bullish fair value gap. And like I said, this doesn't work every day. This is something that's, I think, special to CPI news, I'd almost have to say. Or to a strong expansion day to the upside, where we really have a strong draw on liquidity, being this daily buy side. After we hit that, I think that's where market makers gonna take some profit. Of course, we could simply continue higher if the like in QDOS right here. DXY is slightly dropping out of Wars. And we hit our daily buy side level. We open up with a new bullish volume imbalance. Well, so question for you guys. Does this make sense to you? Like, do you understand what I'm like doing in the background, what I'm using to frame order flow and how I tell order flow, how I map out potential targets in terms of buy side liquidity, how I enter and how I specifically manage my risk? Does that all make sense to you? Like, would you say that if you look at the chart from this perspective, that it actually makes sense? Like, why is price moving up here and holding support on these inefficiencies? Like, why is it doing that? Yeah, we understand we're in a buy program, but yeah, I think with my tape reading glasses on, that's how I can read price. Doesn't happen every day like that. I mean, sometimes we just get some chopped up consolidation, like right here, where we took our initial loss. Before that, even in that consolidation, we realized we're in consolidation and we're not going to look for huge profit targets. We tried short of the inversion right here, secured profits at the low, and went long on this bullish fair value gap, secured profits right here at the high on this inversion fair value gap until we closed above. No reason to trade before the New York Open, but we still see how nicely the inversion fair value gap has been respected paired with the 5 minute. We chop around for a little bit, trigger breakouts, stop hunt them, continue back up, trigger breakouts one more time, make it really hard for them. 936, we got stopped out here too because of a too tight stop really. And from here on, we used every single bullish inefficiency that we have left behind, every volume imbalance, to deliver into our daily buy side target. So essentially from our entry, once we got the confirmation close above, 17 points. And we don't hold for all the way to the upside. We simply take our scalps, take what is ours. When we understand we are in these buy programs, and so far that paid out really well today. No hindsight, nothing. We've been talking about this before the New York session and before the CPI news. Right here as well. We talked about orders on the 5 minute time frame. I really like doing this more on the 5 minute time frame. Like right here, the short we took, the pre-CPI news entry, unfortunately wicked out here to the downside. But even if we would have done this on the 5 minute time frame, before the New York Open, we would simply anticipate this fair value gap to hold support. Once we get to close below, well, different story. We also had a inversion fair value gap and volume imbalance on the 5. So we, look at that same thing. Volume imbalance remains open, we hold support. New bullish volume imbalance. We don't retrace into it, we don't have a volume imbalance, we continue higher. Right up here, before we hit our daily drawn liquidity, high risk entry at the high of the day, expecting the drawn liquidity is so strong that it doesn't even want to retrace. Tack, 5 points booked. And right here, same story, bullish fair value gap, tiny inversion fair value gap right here. Oh, come on, there we go. This candle's low to this candle's high. Rejected. We closed above it, then kept holding support, also closed above our bullish fair value gap right here, digged into it, and delivered further to the upside exactly from that highest bullish fair value gap without feeling the need to retrace before we take out that daily buy side. What's happening now? I don't care. The session is done for me. We had our nice executions. We had them before, we had them during London, we talked about it. And this live session was just to basically prove a point. Yesterday we spoke a lot about trading with intuition and simply trusting the gut feeling, following order flow. That's a viable option. And I don't think many traders out there are doing it like this. We talked about it in hindsight during London, catching long, the short. This short right here, we caught that on the stream. The 2022 model long, we spoke about the potential whipsaw, stop out to the downside because they don't really like any traders being in profit. Even from yesterday, so only if you had no stop loss at all, you would have enjoyed nice 50 pips to the upside. And my magic continues. We hit the 4508 level, daily buy side. And when do we start to disrespect our bullish fair value gaps? Now. Nice displacement candle at 10:07. So with that last new hour, we pushed up, hit our daily buy side draw, 4508, exactly where we took our profit. And now we could expect resistance from these inefficiencies to deliver into short-term lows. Will we do that? Well, I mean, we might as well. Nah, I want to be done. I want to focus more on answering questions. Because of CPI, it's hard to get the model we usually trade. That's why we're not trading. Yep, exactly. Low probability. We simply trade order flow today, like we did right here with all these executions. Ah, stupid spread. So same thing again, but now to the downside. Bearish fair value gap, as long as we see that area being respected, no reason to believe that we're going to make a new higher high. Inversion fair value gaps to the left. We add to our position up in that inversion. Of course, this could have also just been a quick blow off before continuing above the daily buy side. But right now, following the story that fair value gap tell us, well, yeah, it's telling us this. Otherwise, we would have only seen a wick here to the downside. But keep in mind, this is a 1 minute time frame. And once we kind of shift structure here, second bullish volume imbalance in a row, not ideal. It makes sense to look at the 5 minute, and then we likely see, oh, we just had a 5 minute inefficiency up here, bounced off our 4500 level. We don't have any more inefficiencies to the downside other than this old unfilled one right here. Open up with a 5 minute bullish volume imbalance. Is this going to be the high or just a little stop hunt for all these longs who got it right, now faking new shorts into the market to continue up higher and make the shorts pay for the new longs to the upside? That's the question right now. And we can tell once we close above this bearish fair value gap what it looks like it's going to do right now. 1010, that's also the end of our macro, so 950. Right here, that's where we entered. 950 fair value gap, entry long, continuation long into our buy side drawn liquidity. 1010 is over. We retrace into the new bearish inefficiency, overlapping with our inversion fair value gaps now. And we see how that plays. It's not really worth to take this play, even after, yeah, I don't know, 5 winning trades to the upside here. I think that's good enough to call it a session. But since we're in a simulated environment here and we can do this for practice, we just have to make sure that we're able to draw the difference between simulated and funded. So now after leaving these two volume imbalances open, I'd really like them to see closed in on that candle that we form right now. We close above the 50%, open up again with a new bullish volume imbalance. We have equal lows right here, equal lows right there. But yeah, potential is still there that the shorts are going to pay for the long continuation. Just pick up some stops. Buyers are selling into the hands of market makers. Market makers are happy to buy at this price to continue run it up even higher. Make more and more profit. I hope that makes sense. The macro, ICT macro between 1050 and 1110. Basically just a 10-minute buffer before a new hourly candle. So this entire area. Not sure if you have heard about that ICT concept. That's usually when we see expansion or some similar things like that happen. So from 950 until 1010. Can usually expect a nice move. This is also interesting because the 10 a.m. new hourly candle also happens to be a new 4-hour candle. Here, at least for the futures market. So we have a 10-minute buffer before. We have our drawn liquidity. We enter right here. We take it long. And we play the short. After our displacement, bearish fair value gap, macro is over. Done. So let's see, we don't want to see support on these volume imbalances now, and this, yeah, well, inversion fair value gap. I want to see the close at least below this volume imbalance and back below our bearish fair value gap, ideally. 10 seconds to go. Take off some risk here. This could also now be the time where market makers put in a high and low to distribute, to realize their profits after hitting a major buy side target. NQ likely also rejected a little bit. Yeah, also rejected here. We understand that we have been on a nice bullish run into a daily buy side objective. We are now inside the 10 to 11 a.m. SilverBullet hour. With our displacement after taking a higher time frame point of interest, bearish inefficiency being left behind, disrespecting all these bullish fair value gaps right here. We'll see if we respect this. We could consolidate in here for a bit until we continue lower. Close back above the 50%. Hey Omar, you missed the best live tape reading session we've had so far. You've been here for the pre-CPI stuff, but you missed the entire CPI guide. Like, we've killed it. Macro, bullish fair value gap, just continuing with the trend of every inefficiency that we left behind. Following the tape read, even the CPI news event. We had our 2022 model. Unfortunately, we've been wicked out here. But after that, I mean, we did pretty well. Scalped a little bit inside that consolidation. And took like 1, 2, 3, 4 winning trades all the way up to our daily buy side target within the macro. That's not bad at all. And now we had our displacement. Not really sure yet if it's a true displacement or just a trigger to trigger shorts into the market to make shorts, new short orders like mine right here, paper trade. Understanding that. To make shorts pay for the longs further to the upside. Because right now they're running out of steam, running out of power, hitting the daily buy side liquidity level, consolidating or going sideways until 10:07, continuation lower, leaving behind a inefficiency. So as long as we respect this, I think we should still be fine having this as a protected high. Wicks can do the damage, but otherwise, I don't know. Usually what we see if shorts are paying for the long, we see a quick V-shaped recovery and not a slow consolidation. New bullish volume imbalance. Thank God I recorded the entire live stream. Well, make sure once I upload the live stream recording, you're gonna watch this as well, because it always depends on the trader if he can make something profitable or not. And I don't think many traders use the approach that I have been showing right here, simply following order flow. Even on the 1 minute time frame. Okay, so now we get that confirmation. Let's wait for the close above. If we see the close above, we can almost reverse our position, understanding what's happening. 8, 7, 6, 5, 4, 3, 2, 1. So closing above this bearish value gap, negating all this bearish structure, bullish volume imbalance. I think we should target these highs now, continuing with the bullish order flow. Of course, I could also be spooked now, and we just happen to consolidate here for a little while after hitting a daily objective, daily buy side liquidity, and Q hitting a monthly buy side objective, September highs. Right here, September highs gone. Next monthly buy side liquidity would be, well, August. Doesn't exist. In terms of highs, August was down. September took out August highs. Now, 1st of August, I guess, right here. August buy side. And then we would see July buy side. And then we're not that far away from the all-time high, my friends. Three pushes to the downside. 1, 2, 3. Free drive setup. Let's see, new bullish volume imbalance, bullish fair value gap. Just follow order flow here. Now we have a inversion fair value gap right here. And once we see stuff is not being respected anymore, we simply, cut it. I mean, it depends what you're after. I usually stop after $500 profit on my 50K account. But for the sake of this live stream and the practice purpose, just keep on going. Can't practice enough, really. So we filled on the bullish fair value gap. If we ignore that immediately, don't think we're gonna go straight to these highs. No, we keep respecting it, at least of right now. Getting a little bit messy here with all these fair value gaps. But once we see we close back above this old bullish fair value gap, initially hold resistance, close above it. Now we hold support with a new bullish volume imbalance, deliver back above it. I want to see this bullish fair value gap be respected. Otherwise, I'm going to exit this trade. I'm going to get stopped out anyway. So this is just what we don't like to see, where we have inefficiencies, but we do not respect them, making us believe that we're actually going to go long here. Then after we hit our daily buy side objective, we understand that, this could be market makers to get shorts and both longs trapped before continuing lower. Eventually we would still expect support here, but it's just not worth the risk here. And once we see our areas not really being respected after we hit a major buy side liquidity pool, it's really where we could stay inside of a range for a little while at least, for market makers to put in lots of orders at the highs and at the lows to take their profit and let retail traders get chopped up. That's why it's good to have a drawn liquidity, a objective, see how we aggressively expand it to this level along this trend line. We broke the trend line, had a bearish inefficiency, but we didn't really respect it nicely. And that's where we start to, after filling the objective from massive bullish order flow, respecting each and every of these bullish fair value gaps here, to make it a little bit harder on the traders, I'd say. Take out stops, consolidate. You can see the candles aren't as bullish anymore after taking that buy side. We're outside of the macro. And I think that's where I'm going to call it a session and close trading view. So after closing below it, we immediately close back above it. Those are not the signatures that we would like to see. Depending on how you place your stop, you could have still survived this. But once we close below, I'm out of the trade. 3-point stop, so really didn't lose much on this trade. But still, because right now we would frame it as a inversion fair value gap, and usually during these sideways but still kind of up movements, this is getting a little bit harder, especially if we're on the 1 minute time frame and we have some stuff on the 5 minute. Well, not really. 5 minute bullish fair value gap kept holding support. So we're also going against the higher time frame, trying to go into the short. Have to be aware of that. If we check out the 15-minute time frame, I have a bullish fair value gap below. 15-minute time frame is still bullish. 5-minute time frame is still bullish. So if you get that potential continuation short with the displacement, be aware that it could be a fake out to make the shorts pay for the longs. And we see these signatures, bullish volume imbalances, keep coming up, but we don't really see yeah, the inefficiencies be nicely respected. So it just makes sense to, yeah, close your trade, because typically once we see them not being respected, always means we're going to take some short-term lows. But eventually, bullish volume imbalance, retest the bullish volume imbalance. We continue to deliver into buy side above the daily high. Looks like we just can't stop and can't get enough buy side. Make shorts, pay for the long. Now we closed above our daily buy side level here on the 1 minute time frame. Like I said, we have a daily bearish inefficiency right here. Bearish order block. We have 15th of September buy side right here at 4566, but it's really 66 points away from where we are at right now. And if we simply use our standard deviations, we should see which areas we could be rejecting from. On CPI news days, we like the positive 1.5 standard deviation especially. Let me hide all the drawings here quickly. Okay, we're already above the 1.5. It's really, really rare that a daily candle is closing above the 2 standard deviation. It's like at the 4% extremes of the bell curve, if you know what I mean. If you look at a bell curve distribution, you have 99%, or let's say 90% of the time we're like in here, or let's say at least between 1 and 1. It's really rare that we get outside of these, of course, during a expansion day like a CPI news event where we just pump up. Never really went far below the open here. Classic update candle. We just keep on expanding. So really, let's see, maybe 1.5 standard deviations based on, yeah, roughly 20 years of data that's being calculated, taking the average of the daily range and deviating that, making a bell curve out of it, and plotting it on the chart. So let's see, sticking to the 1 minute time frame, bullish fair value gap, volume imbalance, another tiny little bullish fair value gap. So really, if we want to continue to be bullish, and we're not just going to fake out shorts right here, and now we're going to fake out longs, we should act, or we should see support from these areas. But that's going to be the end for me. I'm going to close my charts here. When you think you got the keys to the market, they change the lock. That's cool. Hey guys, yeah bro, I had to do some things. Then I watched the video you sent me, and damn, the rabbit hole was deep. I thought I did have an advantage trading him, but apparently I was completely wrong. Well, not completely wrong. Like the Iman trading guy said in the video, it's not about what you use, it's about the trader applying support and resistance, ICT concepts, a stochastic RSI strategy, a EMA pullback strategy, a EMA crossover strategy. Yeah, I'm sure there are profitable EMA crossover strategy trader out there. But they make it work. That's the thing. Most others jump from system to system, trying to find the Holy Grail, while the Holy Grail lays within each and every one of us, to say it really beautifully. That's self-mastery. Being consistent. If you stick to a specific setup like the 2022 setup, if you go with the flow, it's really up to you. Whatever suits your personality best. If you don't really, if you like to have something that you can rely on, like backtesting data, yeah, well, then you go for a model or a indicator-based strategy, I'd say, because that's easily backtested. Can backtest it over multiple years and simply rely on that and go to sleep well knowingly that you're going to do the same thing tomorrow that you do today. Or yeah, you simply go with the flow and take every session as it comes. Sometimes you lose, sometimes you win. It's gonna happen the same way as you would with, I don't know, with a indicator-based strategy. You simply can't always win. But I think even for a CPI Friday, we outlined the draw on liquidity perfectly. We simply used, we went with the flow, took bullish fair value gaps when they were there, and continued to scalp like 15 to 20 points all the way to the upside. We got the direction of the CPI set up right because the chart has already been set up to do something. Of course, we got the wick, but that happens because we have that very thin order book. But yeah, looking at price action or marketplace from this perspective, I think it's rather unique. And I don't know, at least for me, it makes sense why price is respecting this area and continues higher. Other than like, I don't know. So I think those fair value gaps do in fact help. Okay, would be nice if you can do another one like this again. Really gives an insight into the thinking process. I will. I got great feedback, so we will see how it goes with the trade day challenge. I don't really want to stop at day 7 from 66 to say like, nah, scratch a specific. Would I find the stream on YouTube? I will upload it to YouTube. I will cut it into pieces and upload it to YouTube. It's already 2 hours long. But yeah, I will upload it to YouTube. Yeah, so gonna see how I can do that. Well, I won't do it with my funded account on the 1 minute time frame. I don't know. We just get too many opportunities while it's, I think in my opinion, better to stick to the higher time frame. You get less fair value gaps to enter on. It's a lot, I don't know, it kind of also depends. But we saw it during London, before the CPI news event. We did the exact same thing on the 5 minute time frame. And then the only time when it really becomes a disadvantage to be on the 5 minute time frame is when we get these strong expansion moves to the upside. But it always depends on what you're targeting. If you can be content with enough and close the charts afterwards. Like even me today, I made like $150 or maybe 200 on my Apex funded account. And then I switched over to the paper trading account. Some people would be annoyed that, they simply didn't use their funded account for that, securing like these $1,000 that we secured on the paper account. But, well, you never know. That's hindsight. It was a good practice. And I don't know, unless you guys have any more questions. I think we end the live stream session for today. What's the time? 4:31. And I will stop the recording here and upload it to YouTube. I stop it right now.